Okay, welcome everybody to the Pipnotic Symposium for the 3rd of April 2017. I have received a lot of emails regarding different things to look at. I have to talk a little bit about identifying fresh levels of supply and demand, so we'll get to that. And I received a request from a gentleman in Japan who wants me to look at the pound Australian dollar. And a few other requests regarding general supply and demand theory. So we'll get through all that stuff today. I'll put that on my board so I've got it handy. Cool. Okay. Good. Okay. Let's start with the pound Australian dollar. We go on the weekly chart. You can see that price left this base here. We moved up, and now we're starting to move back down here. So price is trying to find, seek the liquidity, which it has found for the time being just here on this accumulation candle. See price poked into this area nicely, and now it's rejected. So this area of demand gave price some support, and then it reacted up here at the opposing supply at the top here. Now price is just reacting to that, so now we're kind of drifting sideways. So if we have a look in here and see what it is exactly that price reacted on, we'll be able to get a little bit more insight into what it is that we're looking at. Okay, we're going to remove the weekly area just for the time being and have a closer look. You can see that price has been moving up here relatively inefficiently. Just here, price rallied. It came back. We tested the highs of these accumulation candles. We moved above, moved higher. It came down, tested the highs of these candles, and we moved up and then back down, tested again, and then we continued higher. So we actually have 3 areas of demand nested in here. We have, here's the bottom of the first one, and here's the bottom of the second one, and we have the bottom of the third one here. So currently, price is having a bit of a wrestle with that. We're just going to box that whole area off. So we have this candle here, and we'll go down, we'll put it like that, so we have a bit of protection for the stop. I'm going to remove, actually I'll leave these in there, and we're going to see exactly where it is. So let me turn my phone off. I'm going to go back here and see what happened. You can see here that price reacted on the first level. So it reacted just here. We can't really see anything because I don't have any historical data that goes back, but we reacted just here. And this was fine because, price rallied, and it came back, and it rallied, and it came back here. And so we actually have quite a lot of children in here. We have the parent down here. We have the first child and the second child, and this is the third child. And price came down and fed into the top of the second child just here, which is what we're currently reacting at. So I'm going to draw that in a little bit clearer, like that. So that's what price touched on. You can see we tested it on the release. And so ideally, if we're going to be trading this, we don't want to be paying a price any more expensive than the high of this area of demand, which brings us back to the roughly the 156.76. And this candle here, the one that poked down, the low of this candle was 156.83. So roughly 20 pips away. So it came down here, and we managed to get some support, and our prices are moving higher. Okay, so with that in mind, we're reacting on this. This is actually weekly demand down here at the bottom. We're going to box that off with an area of weekly demand, like that. This is where price is currently reacting. So currently we have weekly demand holding price. So this is a pretty good and important area. If we look a little bit further, we still have this area of fresh demand down here. This is a really nice area. The reason I like this one is because we had a push higher, accumulation, another push higher. So price probably come down and react roughly at around this level, so the 150.30-ish area. Still pretty far away from current price at the moment. So price is bouncing off that one there, and you can see that, technically speaking, we can draw our downward sloping trend line from, let me zoom in so it's clearer, from this high to this high. Price has broken the trend line, so we were in a downtrend, and now we're having a bit of a breather. So now we're in downward consolidation because we are not respecting this trend line, but we still don't have a qualified upward sloping trend line, so we are still in downward consolidation on the weekly chart. If we have a look at areas here that might be interesting to us, we can see we have a nice fresh area of supply just up here at the top. And when you see this kind of a wick formation here, this tells us that on the smaller time frame, this is going to be a child and the parent's going to be just up here. So we have another one just up here. We'll draw that one in, very far away from price at the moment. And then down here, we can see the price is kind of just drifting around. We have this little tiny one here, where price tested once. The second test, it went a little bit deeper. If we have a look here, you can see that on this accumulation candle, the following candles, you want to identify the area. I mean, the lowest price that price went before the release, and it's these two here. So the lows of these candles here. Let's have a look. This is the low of this candle is 159.03, and the low of this candle here is 159.04. So these are pretty close to each other, because this is important because here we had a period of accumulation, and then price managed to come back to this level 2 times before it left. And so you know that the thick liquidity is below this level here. And so this is where price currently poked into. So I'm going to mark off this area. I'm going to mark it off like that. So now we have a nested area of demand at this weekly area just below. And this is what price is currently struggling with. We go to the daily chart and have a closer look. You can see what we saw on the larger time frames. And currently we're reacting at this weekly demand. And so now we want to identify areas of fresh supply and demand that we can expect price to react on. Okay, so if you have a look here, you can see that I'm going to mark this one off here. So we have this area here. This one is no longer valid. Why? Because this area of demand was consumed by this up here. So we're going to put this like that. This is where price reacted. But if you look at this and you ask yourself, is this a parent or a child? It's a child. Where's the parent? The parent's just here. So we're going to move it back here. You ask yourself, is this a parent or is this a child? Well, it kind of looks like a parent. If you look left, it probably is, but you can see that price gap down from here. We have some accumulation candles up here. So this is telling us that we want to have a closer look up into this. So if we go to the 4-hour chart, and we'll note the high of our current price structure, you can see that we have it here. And actually on this time frame alone, we could find the nested area of supply. You can see it's here. And so price rallied, we left, we poked back at this area, price came down, we tested again. So if price comes back up here, this will be the 3rd time back. So I'm not thinking that price will hold for any extended period of time. We go to the daily chart. It's going to mark off the high here. Sorry, not the daily, the hourly chart. We're going to scroll left and see what it is that price is reacting on. You can't really see much in here. If you go to the half an hour, see we get a little bit more clarity. You can see it here a little bit more, and we're actually reacting on this just here. And this is where we have some fresh supply. You can see down here, you see how price left here. This is where price left the area. We managed to gap down. So we actually had a horizontal trend line break. And the point of origin for that move is just here. So price gap down, we accumulated below the area, and now price went south. And so price managed to test this nice accumulation candle, which is roughly the same area, once. And so this is probably the next area we're going to see maybe some resistance. This is not, it will not be the first time back, so this is not a fresh area, which makes us want to look a little bit higher. And on this time frame, you can see that this is pretty messy. So if we look a little bit higher, we can see the next area of 4-hour supply is up here. So we have that up at the 170.05 area. So that's probably the next area that price is going to give us a bounce. So we have some areas up here. We have to now find areas down towards the bottom. So if we go on the hourly chart, it's not very clear on the 4-hour. You can see that we have something here that seems to be which is nice and fresh on the hourly chart. We can have a look and we can see that we have this one here. So we have this one here. We have this one just below. And currently, price is reacting at this little one here, which is holding price. nicely. And to the downside, I mean, we don't have any fresh demand until here. So we have the fresh demand down here. And then we have more demand down here. But that's it. There's nothing else here that's fresh. And so you can take this, or you might want to look lower, because this is just this is not fresh demand down here. This is fresh here at the 161.25 Takuji, and then we have just down here below at the 160.55-ish area. So if we have a closer look at this one here, you can see that this candle here, the body of this candle is not within the range of the previous, so you could actually adjust this a little and go from here to here. And so that would be the area there, so we can shave off a few pips. So you want your stop to be a little bit below if you go for there. And if you're going to take the one below it, then you're going to have I will focus on the one above. Then you're going to want to make sure that there's a decent risk reward here. And you can see that the depth of the curve, I mean, we're pretty deep in the curve. If we go from this swing here, we're about the 79% retracement should price come back to that area. So that's pretty nice. And so if you look from when price left here and the top, you can see it's really far away. So it's 45 pips, the size of this area. So you want, I don't know, at least a 2-to-1, 3-to-1, 4-to-1 up to the highs. And so we're getting, I mean, it's a huge profit potential there. And I think this would be a pretty nice, interesting area here to look at, because opposing areas of supply, well, we can't see what's forming now. We'll have to wait and see what supply looks like on the way down to this area. But should no fresh supply be formed on the way down, well, then we're looking at these other areas up here for some tests. And you can see that we have some stuff going on in here on the smaller time frames just here as well. So that might be a pretty interesting one there. You can see also just here we have another area of demand that's been tested once before. So yeah, so there's a lot to look at there. Smaller term, a shorter term. This is interesting down here, this one here or this one here. Longer term, if you look to the upside, you can see that we have this area here, excuse me, on the daily, which is yet to be tested. Oops. At the 180.11. And if we go down to the smaller time frame and have a closer look at that, you can see that it looks a bit messy. So on the daily chart, it's not a very nice area. If we go to maybe the hourly, maybe we'll be able to see something that's a little bit more informative, and you can see it's a bit of a mess. You can see that we have price poked down, we rallied, accumulated, rallied, then we shot down, accumulated, came down, tested this supply just here. Price broke away. So this is not fresh. The fresh level is up here at around the stops above. Let's see where we are. This is at the the 18700 area for a longer term. So I'll just we'll have a closer look there on the daily chart, and you can see that we're up here. Also, we have, I mean, resistance just up here at these lows, of course. Price kind of tested, and then it broke just below. So we'll probably find, maybe we can see if we can find some smaller time frame supply that challenge that level. If I have historical data. That's the challenge. Okay, there we are. Okay, so you can see that, yeah, it's pretty messy. There's some news coming out of that stage. We're probably going to have to go to the 15-minute or the 5-minute, and I don't think there's anything there. But you see we have a small area there just at the edge. And then, I mean, price broke away from here, and this is where price received a test before it dumped down. You can see this wick went up as high as the 19500 area before it went down. And so I think price manages to come back up to this area. Where are we? just up here, then we're going to see some reaction. It's pretty clear here actually on the daily chart when we have something that looks like that. But this is not, and this is still untested, but if you look a little bit higher, we have a clear area which is just here. So the 198.56, but that's really far away from price, as you can see. But to the downside, when we have a lot of interesting areas to look at here. Keep around this one here, and the other ones we discussed. Cool. All right. Okay. Keith is asking, so apparent supply and demand can be a very finite zone indeed on quite a small time frame, even though we are still looking at higher time frame weekly charts. That's right. It's because, I mean, okay, we'll have a look at another pair just to see if we can find a really good example of this. We go to the weekly chart and we have a look at the low of this one here, where price reacted. So you think, wow, there must be something whopping in there. So let's go to the 15-minute chart. Before we do that, we're going to put a vertical line and find out. So it's going to be in this candle here. This is where it saw the test. We go to the 50-minute chart and we start our scrolling. I'll try your trick, Keith, see if I can get it to work. Vertical line. I couldn't find it yet. Okay, we have to go to the half-an-hour chart. Yes, there we saw it. There it is. Okay, so I mean this is the area that the weekly price reacted to, and you can see actually very clearly that price reacted to this, and this is actually this is a child. We have the parent just below, which is just here. This was tested once, and then price reacted at this area just here. And if we go even to the, let's see, we can. I wish we could go to small time. Okay, cool. Okay, good. So here you can see that price reacted here, and here we'll be able to get our trend line, horizontal trend line. Put it like that. And you can see here that we had no closes above this level here. And this candle, which is the one that left, it's actually this one here. So we're probably going to see that price reacted between the high of this candle and somewhere in this little zone here. So if we go back, we go to the current price, go maybe to the 4-hour chart, and look for what it is that price reacted on, which was just here, the orange line. And you can see that it's just here, I mean, just at the top. Let me move this out of the way. So it was just here. So it's actually here where the candle broke away. You can see here we had some kind of wicky candles. We had this horizontal trend line. This is like a small area of supply. It was taken out by an area of demand, opposing demand. So then you ask yourself, just draw that in. We have this one here. What area of demand took out this one here? And you can see it actually pretty clearly, and it's actually this one just here. This one just here. So price went to this one here. I moved up, so price actually left from there. So plus the spread, in consideration for the other always cascaded in and around this area, it'll probably bring price, I mean, somewhere up in here, which is roughly where price reacted. Excuse me, I had a cough there. So you can see that even on the weekly chart, or the monthly chart even, when price comes down, it's often reacting on these small, sometimes as small as 5 or even 1 minute areas of supply and demand, because that's where the price is seen. Sorry, the reaction is seen. So it's really fascinating, actually. So it's always worth drilling down to the smaller time frames to refine your entry. And normally I do this by looking at wicks. This is kind of the shortcut that I like, but you don't have to. You can do something else. But the reason I like the wicks is because, in considering this this for the moment, you can see that we had this area of accumulation here. Then you say, okay, but we want to focus on the lows where price has not been back to, or rather the cheapest price, the price returned to before it left. And it returned to, or roughly the body there. Yeah, so price came roughly back to that area. So it's just a really good idea to focus on the green candle for demand, the low of the green candle that left the area of accumulation, or in this case, demand. Yeah, so it's fascinating. It's absolutely fascinating, and it's shocking how much of a reaction a 15-minute or a 5-minute area of supply and demand can get when price is racing down to it on a weekly chart. Just pokes into the area, and then we have this this multi-week withdrawal away from that area of liquidity. So it's pretty fascinating, very fascinating study. You can see here on this one here, the Australian dollar. You see that we're reacting to that. So we've had 1-2 tests, and that was enough for the Taibing to hold price. If we take this accumulation candle, because it's so wicky, we're going to take the whole candle. This is where price reacted 2 times. And so price is kind of wriggling between these areas of 4-hour supply and demand. We go to the 4-hour chart and have a closer look. You can see that it doesn't really make sense to do anything there on the higher time frame. So let's remove actually all of these and perform the analysis from the top. I'll start on the monthly. So you can see here that we have this really nice area of supply, still fresh and untested. There's a little bug there I have to fix. And you can see here that when price left, each time it comes back, each time this candle comes back and tests an area, that's the edge of an area of, in this case, supply. So price left, so price came back to this area here. It's poking to the edge of an area. And here it's doing it again. And then here, it's doing it again. And here we have another one just here. And then the same thing applies all the way down. And so it's just a really good idea to focus on where price has not been when you're putting on an entry. So you have it's a really good idea to, for example, put it on an entry like this one here. This is actually a weekly area, I think. So we have this area marked off. And you can see that price went down, it poked up here, and then it came back and left. So there's probably an area of supply up here that looks something like that. So we go down to the 4-hour chart and have a closer look. We can probably identify it. Maybe this enables us to change the entry. And you can see that, price left this area and it poked up into this area here. So it's probably going to react to roughly this area here, the edge of the area. But this is not, it's not a fresh area. Why? Because price has been back this area here. So you don't want to sell for a price any cheaper than where the entry is just here. So the 82.91, so around the 8300 area. And you go to the smaller time frames, even like the 15-minute, and you can find these really fresh areas of supply and demand. And typically, let me draw it. Typically on the smaller time frame, you'll see them come down, accumulate, and then come down, accumulate, and then come down. And you want to choose the one the price has not tested before it continued lower. So this one you don't take. This one is the one that you take. And so this will typically be nested somewhere within here. And you want to go into the smaller time frames and look for this one on the smaller time frame to refine your entry. That's generally the better thing to do. Remove that pen. Okay, super. Okay, so let's have a quick look at the dollar. See what the dollar is doing. You can see the dollar is racing higher. If we have a look at the weekly chart, maybe even the monthly, you can see that we are actually. Let me remove these small areas. Actually, I need to keep them on there because they're important. But you can see on the monthly that we are reacting the lows of this area of monthly supply. So we had a test here. This is where price reacted. Now we're having kind of a drift lower on the weekly chart. you can see that this is the same area here. So we've established an area here, and then price started to drift lower. So now it's kind of going to gravitate towards the thicker pools of liquidity. So I let you all in. And it's going to start looking. Okay, and then it's going to start looking for these limit orders, which is the pools of liquidity. On the weekly chart, it looks like that. Yeah, and if you look on like the weekly chart, you can see that we have this like really ugly kind of price move, and that really kind of ruins what we want to look at. But you can see that we had a bit of news there that kind of shot price all over the place, and now price is slowly breaking it down as a reaction on this the very edge, the lower edge of this monthly supply. And that price is drifting lower. You can see that we're reacting on these accumulation candles here. Here we have maybe two areas of demand, kind of two or three overlapping. We'll just mark those all off. So this is the first time back to that area. That seems to be holding for the time being. We have this area of opposing supply, which has now been consumed by this here. So zoom in a little bit. We have this one here, which is actually a continuation pattern on the smaller time frames. So price left, accumulated left, accumulated left. We reacted on this daily demand. Price moved through this, which is not very well formed supply, and it moved through this. Then we ask ourselves what area of demand took out the supply. It was this one here. So this is where the area is that we can expect price to react on. This is the dollar index. So what we want to do, you want to position yourselves, for example, in the same direction as the dollar index in association to the pairs that you're trading. So if you're looking at a pound US dollar, for example, when price enters this area of supply, you want to buy the pound at an area of demand when price comes down to on the pound chart, because you know that the dollar is going to receive is going to attract some selling once it comes back up to here. It's going to attract some buying once it comes back down to here. So you want to line your entries up with the areas of supply and demand on the other charts that you're trading. So I don't trade the dollar index, but I look at it a lot in relation to how I'm positioning myself on crosses that contain the dollar as one of the two currencies. We can actually refine that and move it up like that, so it's a little bit more conservative like that. Good. So I think for the time being, if we go to the smaller time frame and have a quick look, you can see that price is kind of gnawed away at this area of supply. It's not fresh. It's been testing once, twice. It's almost eaten away, and you can see price doesn't seem to have any intention on slowing down. But you can see on the smaller time frame, what is this? This is a half-an-hour area of supply. Let's have a look at that. You can see that we have this. So this is a half-an-hour area of supply. It's been tested once on the release, and price is pretty close to it. So when price gets up here at the 100 spot 50 area, we may see some kind of a reaction. And so what you want to do is you want to go to another chart. We'll take, for example, the pound US dollar, and here, so we want to be selling the American dollar. So we want to be buying the British pound. So you want to find areas here where these are going to line up. And we have one, this is the half an hour. You can see that we have something that lines up pretty nicely here. Go to 50 minutes, we can find it. You can see that maybe the 5 minute even. And we have something kind of going on here. We're just going to box off the whole area. So the 124.74, 75, we have an area here, which is pretty close to price. And price is getting pretty close to this area of supply on the dollar. And so, you know, when price gets here, well, you don't know anything, but there's a likelihood that when price gets here, it's going to start moving down. So when the dollar goes down, the pound is going to go up. And so when price reaches this area here, you can buy if the dollar has started to come pretty close to this area just up here. Which is a really nice area, but you can see just on the approach up to this level here that we're starting to, I mean, there's no real demand here, which is really nice. You can see that this is not demand, this is just kind of chop prices, there's no demand in here, so price is going to have an easy time moving lower. The only fresh demand on this time frame that you can see is actually down here, is right here. So price, if we do see a reaction here, we could see it move all the way down to the mid to low 9900s, which would be really nice, because if we do manage to position ourselves long on the pound here, then you want to look again at opposing areas of, in this case, supply here to the upside here. So if you go on the hourly chart, for example, let's go to the larger time frames. Actually, I just saw one there. You can see that we have this area here. It's fresh, hasn't seen any reactions. See, and ideally, you don't want to be selling this until price gets pretty close to this up in here, which may line up pretty nicely with this here. So assuming that you do manage to sell somewhere up here, you can hold this position until you see price reach, or the dollar reach, an area of demand here, or supply here on the pound chart. So it's just a pretty good exercise in lining those up, because you'll find that once price reaches an area of, once the dollar reaches an area of supply and starts to come down, then you'll see the dollar crosses, the currencies cross with the dollar, start to attract some buying attention. Yeah. Okay, there's another one that I want to look at here, which is pretty cool. And this is the, if I can get this chart to switch on, yeah. So here we have this is the oil. And you can do the same thing with oil. And so when you have the Canadian dollar, who exports a lot of oil, once you see the the Canadian dollar reach an area of supply, you want to have a look at the oil chart. So when we have the oil chart, price reaches an area of supply. So this will bring the price of oil down, which is negative for the Canadian dollar. So this will bring the American dollar, Canadian dollar higher. And so you can do the same thing here as we're doing on the dollar chart, but instead of using the dollar, we're using oil, because the price of oil and the price of the Canadian dollar are sometimes pretty nicely correlated. And so it's just another thing that you can do. I know a lot of people focus on the price of oil in relation to the Canadian dollar, and they use this for entries. As a matter of fact, last week, I don't even remember where it was, but Vic Noble, where was it? I don't even remember which. Yeah, Vic Noble, he bought here. He bought just here, just down here, roughly. I mean, he got it at the 80 area, so 6 pips lower. He bought it just down here because oil was doing the same thing. It was reaching, let's see the dates. Let's put these side and side. So price got there at 1900, 1600 on the 30th. We'll do the same thing over here. Yeah, so he sold, sorry, he bought the dollar, American dollar. At the time, price got to this area here, which was an edge of supply for the price of oil. So he was expecting price to pull back, and it did for long enough for him to get roughly 40 pips out of that trade. So again, it's just a matter of lining these areas up, and it would actually be pretty cool to be able to see these on the same chart, kind of overlapped. And maybe I'll see if I can figure something out. So I've been thinking about doing that for a very, very long time. I think that'd be really a nice addition, kind of a layover. So on the dollar Canadian chart, you could also watch the price of oil. That might be a very helpful addition to some of the tools that we have. But for the time being, you just put these charts side by side, and you can see what's going on here. Cool. It does. Your key sayings, your strength indicator probably gives pretty good insight, and it really does. And you can have a look here, and you can get pretty good insight into what's going on. And at the moment, there's nothing really going on. In the shorter term, if we have a look, if we go short term, maybe we can see some kind of intraday activity. You can see that the euro is looking pretty weak, and what else? Got to let it update a bit. Yeah, the euro, the Australian dollar is looking pretty weak on the shorter term, but these are pretty pokey time frames. yeah, it's pretty. You can see it's pretty mixed for the time being. So things are kind of, I mean, the week's just getting going. So price. So these all of these currencies is kind of like kind of drifting sideways for the time being. But you can start to see maybe the beginning of early trends. If you have a look at, it's difficult to pair anything because there's nothing really super clear. But here on the pound dollar, we have a look at that chart. This is on the 1 hour. So this should be starting to drift lower. You can see it's doing that here, starting to drift lower. And you can see we had this little area of supply just here that roughly got tested. Now price is moving lower, and here to the downside, and we have this area just here. So I mean, the strength information is telling you this as well. So you can see when you see the dollar starting to get strong on the smaller time frames, and the pound is getting weaker, then you can kind of flip over to that chart and have a look. I mean, currently you can see the CAD is a strong one and the Kiwi is the weak one. So CAD Kiwi, let's have a look at that, the CAD Kiwi. Wow, there's a lot of symbols there. Okay, CAD. Let me move this over. Where's CAD Kiwi? If I can find it, I suppose you. Can anyone see it there? CAD Kiwi or Kiwi CAD? There it is. It's the Kiwi. It's the Kiwi CAD. That's why. So you can see here that the CAD is strong and the Kiwi is weak. CAD is strong, Kiwi is weak. So this should start to go down. You can see here that we're seeing some rejection up here, which is nice because it's happening at what appears to be some kind of a micro area of supply. So if you go to the smaller time frames, you can see this pair beginning to break down, which is nice. So we had a reaction just here at the highs. If we go to the larger time frame and see what it is, you can see it's somewhere over here. So if we scroll, you can see that we're seeing this kind of rally accumulation sell-off area. And this is what price is currently reacting at. It's not fresh because price has kind of been back there, but it's we might see a reaction nonetheless. And so you can see, I mean, the strength information is telling us this pretty clearly. Yeah, but on the 1 minute chart, you can see it's changing all the time. So you have to be a little bit careful when you do that. But nonetheless, you can see that we had some rejections, and this was very clear.